Hello everyone, Rahul Shah here, trying to make investing accessible and profitable for the average investor. Now, most people think they are investing when they buy a stock. They see a famous brand like Nykaa, they see everyone using the app, and they click buy. But according to the father of value investing, Benjamin Graham, most of those people are not investing at all. They are speculating. Now, today we are going to put Nykaa through the ultimate Graham test. Now, this isn't about whether Nykaa is a good or bad company. It's about whether buying it right now fits the definition of a sound investment or a risky bet. In his 1949 masterpiece, Benjamin Graham gave us a golden rule. He said, "An investment operation is one which, upon thorough analysis, promises safety of principal and an adequate return." Anything else? Well, that's speculation. So, to pass the Graham test, a stock needs three things: thorough analysis. You know the numbers, not just the story. Second, safety of principal. You won't lose your shirt if the market gets grumpy. And last but not the least, adequate return. You have a realistic path to making a profit. If a stock does not meet all three, Graham says you are just gambling on hope. Now let's see how Nykaa stacks up on each of these parameters. Test number 1, thorough analysis. To invest, you must know what the business is actually worth today. Now, Nykaa is a leader in Indian beauty and fashion, but a great company is not always a great stock. You see, Graham cared deeply about the PE ratio, price to earnings ratio. It tells you how many years of profit you're paying upfront to own the stock. A boring Graham style stock might have a PE of 10 or 15. Nykaa's PE has historically hovered in the triple digits, and currently it is trading at a mind-boggling PE of more than 500 times. Yes, that's correct. 5 followed by 2 zeros. If you pay 500 times the current profit, you aren't analyzing what the company is. You're betting on what you hope it will become in 10 years. Graham would call this speculative enthusiasm, not a thorough analysis of current value. Let's move on to test number 2, safety of principal, or the margin of safety. Now, Graham's most famous concept was the margin of safety. Think of it like a bridge. If you build a bridge to hold 10,000 pounds, but you only let 5,000 pound trucks cross it, you have a margin of safety. With Nykaa, the bridge is the stock price. Because the price is so high compared to its actual assets and cash, there is no room for error. If a big competitor like, say, Reliance or Tata takes a small bite of the market, or if people spend less on makeup during a recession, the stock price could fall sharply because it was priced for perfection. An investment protects you from the downside. A speculation, on the other hand, relies on the price staying high just because everyone is excited. Last test, adequate return. Investors want a piece of the profit, usually through dividends or clear earnings growth. Speculators, however, usually want to sell the stock to someone else at a higher price later. This is often called the greater fool theory. Nykaa is currently in a massive growth phase. They spend huge amounts of money on marketing and shipping. While they are profitable, which is a great sign, the actual cash left over for shareholders is small compared to the billions the company is worth on the stock market. If you buy Nykaa today, you are not buying it for the cash it makes today. You are buying it because you hope the market remains optimistic about the future. So, what's the final verdict? Does this mean Nykaa is a bad stock? Not necessarily. People make a lot of money speculating on growth stories. But Benjamin Graham would tell you to be honest with yourself. If you buy a stock because it's a cool brand and you hope it grows 500%, well, that's speculation. If you buy a stock because the math shows the company is worth more than the price tag, that is investment. Nykaa, with its high price tag and low margin of safety, sits in the speculation camp for now. It's a story stock where the price is driven by future dreams rather than current reality. Investing is about facts. Speculating is about rumors and trends. Well, both can have a place in your life, but Graham's advice was simple: never ever mix the two. If you choose to speculate on high growth companies like Nykaa, do it with a small amount of money you can afford to lose. Before you click buy, ask yourself, am I an investor or am I a speculator? Well, that's all from me today. I'll see you again in the next session. Goodbye and happy investing.